Okay, I think we're live. Yeah, good morning, everyone. Good morning, good morning, good morning, good morning. If you're watching this after the live, good morning. It is actually 11:30 a.m. here. So basically, quickly, I will be trying a lot of things out in this live section today. So for this year, I'll be trying like for the first 3 months, first quarter of the month, I'll be trying, like if you notice on my whole video live session, I don't add music to the background. I'm adding it to it right now. So basically, what I just want to talk about the ballast price range that ICT actually used in the first video for the 2023 mentorship, and so I'm trying to master a lot of things. So you have to bear with me with time. Trying to master, my presentation, audience, and a lot of things like that. But that's not basically what I want to talk about today. So it's a beautiful morning, honestly. It's a beautiful morning, and let's get straight into it though. So yes, I have the chart up here. So last week, is it last week? Yes, last week. And yes, before I forget, happy new year to you guys. I wish you success, every good thing that your heart has ever desired this year, in Jesus' name. And if you are a Muslim, in the name of Allah. So ICT actually asks us to actually map out this fair value gap and also map out this fair value gap. I just don't want to draw it because I don't want my chart to be too clumsy. I mean to make sure my voice is clear because of those people, most especially not from Africa, so they can be able to understand me. So I actually drew this out. I know it is actually a fair value gap, but I actually assume like the fair buy side liquidity has been taken here. So let us talk about the trade ICT took last week. So when price retraces back into this fair value gap and this 1 hour order block, right? Let's go straight to 30 minutes. I'll be doing a top down analysis. So I don't need to always come back to this back. We already know it's from a 1 hour order block. You can see the fair value gap too. There's something that is being called multiple time frame imbalance. So I can assume this is a multiple time frame imbalance that is from 1 hour, 30 minutes, 15 minutes downward like that. So I can call it a multiple time frame imbalance. Now there's something I want us to notice here. Actually, ICT took the trade on ES, that is S&P 500, right? Now let us go to Nasdaq. Let's go to Nasdaq. Same Nasdaq. You can see same thing from what imbalance. Now I want you to notice something here. This candlestick 930, right? This is on Nasdaq, right? Let's go to ES. I don't even know if anyone is watching. I don't want to miss the comment section. Okay. 930. If you notice this low, 1 p.m. If you notice this 1 p.m. on ES actually took out the what sell side liquidity resting below the low, but on Nasdaq, what do we see there? The low wasn't taken, but it actually came to what, to the what 1 hour order block. That's what, first of all, that's what SMT, that is S&P made low and low, but what Nasdaq failed to what make a lower low. Let's go to Dow. Now look at Dow. 9 o'clock, it didn't take out, but when it was around 1 p.m., what did it do? I'm just trying to talk more about my understanding. I actually don't know this balance price range retest. I actually don't know. It was last week I actually learned from one of ICT student in it, because I'm a YouTube student. So I saw it on it. He posted about it. I think it is Jade Cap, if I'm correct. Yes, Jade Cap. You can check him out on his Twitter account. He posted something about it. So I asked him more questions about it, and I came back and I noticed it was like almost the same concept that he posted. Is the same thing ICT used. So I had to study it more, and I was able to find a little bit of more understanding. And I actually like the entry. I'm actually had it to one of my entry, and I'll show you more example. But I don't want this to be more longer than 25 minutes live stream. Probably I will make part 2, but I don't want, because I know people expansion that this retention is not that long. But I just feel like 25 minutes should be enough for me to be able to talk about what I want to. So 1 p.m. if you notice the old daily low was taken out. You can see they did what, take out the old daily low. That was 1 p.m. That was what Nasdaq didn't take out the old daily low. S&P did what, didn't take out the old daily low, but they did what, they took out the low what 9 a.m. Nasdaq didn't take out the low 9 a.m. you can see this one took out the old daily low. Those are enough confidence for us to actually go into the chart. Okay, let us see what's going to go on. That is, let us go and look for our entry. Let's go to 15 minutes. Now I want you to notice something. Let's go back to 1 hour. If you notice on 1 hour, when the price was just going to just was one run up, right? That is, the candlestick was just was one run up to the upside. On the 30 minutes, it was just, there's a fair value gap here. Let's try to mark it out. On the 15 minute, look at the same fair value gap. According to, I'm not, like I said, I'm not a charter member. I'm a YouTube student, and I don't think ICT have taught this on his YouTube channel. So if this is not, if it's part of the rules that is people in charter member, you must not talk about stuff like this on YouTube. Because I actually it's not I learned it from him, but I saw it in his post, and I went back to my own chat to do more findings about it. So if it's actually wrong for me doing this, I will gladly put down the video. But I just feel like since I'm able to learn it for free, I should be able to actually put it out soon for free, so people can actually learn more about it. Now if you notice, there's another fair value gap here too, after the low has been taken, right? On here, that's where I see it actually execute. Sorry. I just like my chart. There's a way I want my chart to look like whenever I'm looking at it. So I actually mark my chart the same way too. I didn't take this trade because I didn't even know about it. Like I said, I just learned about it. Now if you look at this is the I think 15 minute or 30 minute fair value gap we marked out. But on the 5 minutes, if you notice the same fair value gap. Now according to what I learned, this one is being called, sorry, this is called BRP, that is balance price range retest. Let me remove this one. I don't like it. It's already getting dirty. Now according to all the findings and everything I was able to, the study I carried out on it, is that I noticed, let's go to 5 minutes on Nasdaq. Where's Nasdaq? Okay, this is the same fair value gap, right? Oh sorry, I already have the chart on my store. Oh, I thought I drew it as before. Now if you notice, when the price was actually running up here, it actually took out this swing guy. But when I was studying it, the years, we have three markets that are actually moving in tandem: Nasdaq, Dow, and S&P 500. So since I'm the only one I will be interested in taking the trade, I will show you another example, the one ICT took before this trade, which he posted as proof or something like that. Now if you notice, it didn't take out this swing high, right, for the retest into the balance price range retest. You notice it didn't take out this swing high, but Nasdaq did go. They took out this swing high. So I won't be interested in Nasdaq, but I'll tell you one of those more things. I think this might be more longer than 20 minutes, to be honest. So Nasdaq actually took out this high. Let me be marking it out. S&P was unable to take out this high, right, before they came back into this fair value gap. Can you see? Now if you bring out our Fibonacci, now if you notice, the retracement into this fair value gap was exactly 50% of the fair value gap. That's so precise. Content encroachment of the fair value gap. Like I said, since Nasdaq actually took out this high, I won't be interested in taking the trade in this, and we don't take trade on Dow according to ICT footstep. I'm following ICT footstep, to be honest, though. That is, so I noticed that the market, the way it moves sometimes is just kind of I don't want to say some words that I'm not supposed to say, but Dow didn't take out this swing high, right? But we don't change Dow. Now if you notice, Dow did the same thing. It's just meant to do what? This fair value gap. You can see. Now let's go straight into 3 minutes. There's something I want you to learn, which is the most important thing. Now the first thing that is the most important thing that I'm sorry, I just finished taking my breakfast. I'm kind of someone that I actually study like the market structure, like it's the kind of psychology stuff whenever it comes to studying the price to me. Now look at the way the price dropped heavily, right? Look at the way they were consolidating. I think if you're actually looking for this setup, that is balanced price range retest, it's very important for you to see like the market structure moving like a little bit of consolidation I mean, before the expansion. Now look at the expansion, you can see how energetic it is. Not just all this slow like consolidating. No, you can see how energetic it is. Let me show you another example from this chart. I don't know if it's from here. Okay, it's from this place. Look at this US oil, which is the market I actually trade. Look, can you see that it's almost the same thing? Energetic down, then consolidation before what? Expansion. Look at the expansion, but I'll come back to this. Probably I'll do this one as part 2 or some. You can see how energetic the candlestick is. But let's go back to what we are talking about now. So on the 3 minutes, I want you to study something, us to be very careful with the thing. Like these are actually I study price action. Like I study every fair value gap. Why is this one not feeling the fair value gap? Why is this one feeling it? You can see they came down into what the contract agreement. Look at how the body of the candlestick was actually respecting it. That is the body of the candlestick was respecting inside the what the same fair value graph from the was PD or that is balanced price range. So let's go back to Nasdaq. I think as from now on I'll be putting how I turned $500 to 10 million. I'm just having fun and I'm joking. I don't think he's interested. If everybody find value, if people find value in what I'm doing, they'll definitely subscribe and like. And there's something I want from you guys. I will always ask from you guys more frequently is the like and comment. Now I think most people don't comment and like on people's video, because when I even look at ICT videos, like when it has like 50,000, 100,000 views and it's having like 2,000 like. Now let me explain this before we continue. The reason why most people ask you for likes on their videos, whether educational or entertainment, is because the more likes a video gets, the more YouTube recommends the video to more people, and because the algorithm will see it as being that is people actually enjoy the video. Now when you don't like a video, doesn't mean you don't enjoy it, but some people just be like, there's no need of me. I used to be like that before, but when I studied I was like, okay, this is why these people ask us for like is because just to help them, for them to be able to reach out to more audience. Because if a video is doing 10,000 views and it's having only 500 likes, the algorithm will assume that okay, people are actually watching this video, but they're not even watching it that long, whether they watch it but they don't like the content. So what's the essence of pushing it out to more people? With that being said, let's get back to the video. So please leave a comment, like, and let me know after this video whatever you feel that is what you are able to learn from this, or if you actually know about this concept, because I don't know. I just learned this last week. I'm trying to be slow. So you can see they came down to what this on Nasdaq, right? The high that was taken. So this, after taking this swing high, I'm no longer interested. I won't be interested in taking the trade, that is the execution on Nasdaq. Let's go to 3 minutes. Now there's something I want you to look at here. Bring out the Fibonacci for this fair value gap. They came down into what? The fair value gap on the 3 minute on Nasdaq. On the 3 minute on Dow is what? They came down into what? Contract agreement fair value gap, right? Inside the same one. Now let's go to S&P. Let me not tell you the reason why why I think, not the reason why. I don't have to, because I was not sitting right next to him. Why I think ICT actually took the false entry on the fair value gap. Let's go to 1 minute for so it doesn't seem like I'm speaking Spanish. If you remember, ICT said its first entry was what? This fair value gap. That is the high of this fair value gap on the 1 minute. Let me bring this to the side. That is the high of this fair value gap on the 1 minute, because this was exactly where he put his stop loss. Now why ICT took his first entry here. Why? Because I think, not because, I'm sorry if you're using that word, just because I don't want anything that will actually get in mind. Like I said, if it's not actually okay with me putting out this content, I would gladly put it down. Like I would delete it immediately. So I just feel like this could actually, it's because from the word fair value gap from the balance price range test, This is the high of the fair value gap coming from this side. I think that's why I actually took the first entry here. Now when it came down into this place, now this is where like the real magic comes in. When it came down into this place, it took the second one. Right, now we'll be studying time and price. Now this is what 1:25, that's 15:25 p.m. right? It took the second entry here. Now there's something I want you guys to notice. Now before I used to see this entry, but because I was scared. Why am I scared? Because I just believe if price is retracing back here, what if they keep coming down here, and I don't want to be caught offside. You get what I'm trying to say? Like, but now I feel like I have a little bit more confidence since I can see someone that's actually holding my hand and is doing it, and I actually go back and do more research about it. Like, I want to back test if I can see this occurring at least 3-4 times every every month for the past next 5. That is, if I go for 5 years data and I can have it, that is every month I'm having this like 3-4 times on this period. I think I found the right thing. So let's get back to here. So if you notice this fair value gap, that is this is 15.11 and 15.13, the gap, right? Now there's a little gap, fair value gap between 15.12 and 15.10, which is 15.11, this candlestick. Now the first question when I was studying this chart, that it was that why is it that price didn't come down to this 15.11? Now let's go and look for the answer. Let me check if I have a comment. Okay, now let's go to 1 minute on Nasdaq. I think there's only one person that is watching right now, but regardless, the show must continue. Don't worry, next one. I know I have over 500 people watching. Go and write it somewhere, because I'll be writing how to make 10 million from one single trade, and I made 100 pips. I love kidding. If you sit down next to me, you know I joke a lot. Now, if you notice, let's go back to ES once again. This is what the candlestick is, what 15.11. I hope some people don't think I'm kind of candlestick. I'm just studying time and actually price. Now 15.11, where is it? 15.11. Look at the same. Let me delete this. Stop playing with me. 15.11. This is the fair value gap, right? 15.11. Now this is the fair value gap. Now, if you notice, what happened on Nasdaq? I think because ICT has this chart on it. I think, please don't misquote me, because I think ICT has this chart on its multiple system. So since he noticed, I think if people should understand what I'm saying. I don't think I have to keep repeating. I think you understand. So because the price actually came into this fair value gap of 15.11, and there's no you can see this fair value gap has already been closed. There's no need for price to keep coming down, because there's no longer fair value gap here. So since it has closed down here, there's no need. I'll show you another example. Like I said, there's no need for price to come down to this fair value gap. Let's go to Dow. 1 minute. On 1 minute chart, I mean. 15.11. Now if you check on Dow, there was no fair value gap, but the fair value gap has been reached into contract equipment, that is 50% of the day, which is the most important thing. That is, at least once they fill that fair value gap and at least 50% of the range, price can actually move on. What did you see? That 15.11, there was no fair value gap. You can see that everything has been closed. So that because Nasdaq has actually closed the fair value gap, there is no need for ES to keep coming down. I think that's why ICT actually was able to trust it. But if I was the one to actually take that trading, if I'm seeing this kind of setup next time, I'm still new to this, and I don't think I have the balls here to take that. Definitely, I'll be putting my stop loss below this place or somewhere around this area, to be honest, because I think I'm still new to this concept. So, ICT has actually seen, when you've seen something for over 30 years, what we're talking about is the master of this thing. So, if you notice, because it has been filled, see how they fill it 1, 2, 3. The body keep respecting. Algorithm. I'm loving this. Let me check. So now let's go back to the second entry it took, which was let me mark this out on Nasdaq. If you remember, it's on ES. He drew at this fair value gap, saying he believes You see why I said since Nasdaq has actually filled the fair value gap, there might no need for what? For easier years to come out. Now, remember it, I think it took the next favor entry here using this other block. Using this other block, that is the next entry. I think he took it here, which was 1538, right? But on Nasdaq, what happened? You see, he said yes, he's not expecting what the candlestick to, that is this fair value gap to be filled. Why? Because I think on Nasdaq the fair value gap has actually been filled. You understand? Now the next entry which he got was what, 38. Can you see? He actually used it as an entry because this has already been taken. So he's using this other block from the ES. So he's using what is happening on Nasdaq to what, to take execution on what, on ES, because it is ES that's actually reacting more to the what, balance price range retest from the what, 5 minutes fair value gap. If you're just joining now, you have to rewatch the video so you can be able to understand it from the beginning. I think that's why he said he's not expecting this fair value gap to be filled. Let's go to Dow. You see, the fair value gap was what, they came in and they do what, start what, keep running high. I don't know if you are able to understand this. Let me just know if there's a mistake or something in some. So I think I love this concept, honestly. ICT didn't actually really explain it like this. You actually just explain it that is fair value gap, entry, stuff like that. And honestly, if I'm to be honest, I don't know why. I don't know why. I feel like probably that's one of those things he wants to teach us more in the 2023 mentorship. But because I know it's not that someone actually taught me this, nobody actually taught me, but I saw it somewhere on Twitter while I was just roaming around the street of Twitter. So I was like, I think I saw this somewhere. Now, let me check how long I've been doing this. Okay, I say 20 minutes. So when it's 20 minutes, I'm stopping. Now, let's go straight to the trade it took. I remember, I think it was on Thursday. This one. Now, this is why you see that it was this. Man, ICT. It's a good trade. I said she should stop calling me. You should stop calling me. I don't want to say it because I don't want to get him mad. So that's just that on that execution. Probably should have to go more, study more about the SMT, fair value gap, price balance rate. You can go and check JCap on Twitter. It's actually one of, I think those people are in the mentorship, but me, I'm not there. I'm just a YouTube student like you. So these are another execution I see too. I don't want to go to my YouTube because something crazy might pop up. So I will actually go to the YouTube and try to play the video so you can see. And don't do that for me. Okay, so if you notice the same thing is happening here. Now let's look at the chart on the 29, right? Yes. Where's this thing? Honestly, I don't like trading the indices because it's just scary to me. Honestly, to be honest to you, it's scary to me. Like, the volatility is not just something you can play around with. No, there's something I want you to learn from this one. I think I have to make this in part 2 because I don't want this video to be long at all. It's already 23 minutes, so I'm going to be stopping this right now. I will name it part 1 and I'll come back to the part 2 because I know once people see it's getting 30 minutes and cool. I'm very sorry for that though. They won't be interested in watching it, and I'm trying to make sure I'm able to hold people down. So I can say I have 2 current viewers. Thank you. I really appreciate you guys. So you guys can actually come back, leave a like, comment. Like I said, I really appreciate it to help me to reach more ICT students that are not in the mentorship like us. So you guys should stay tuned for the second one right now.